Did you know that in March 2023, something happened that could reshape the global financial system? Yet you probably heard nothing about it. The world's six most powerful central banks, the Federal Reserve, the European Central Bank, and the Banks of England, Japan, Switzerland, and Canada made a quiet announcement. They established permanent, unlimited currency swap lines among themselves. In plain English, they built a secret, limitless emergency fund. Central banks don't build tools like this for fun. They build them when they see a crisis on the horizon big enough to need them, and this is just one piece of the puzzle. Their actions tell a story that their words won't. Take gold, for example. Between 2022 and 2023, central banks went on an unprecedented buying spree, hoarding over 2,000 tons of physical gold. That's the most they've bought in over 55 years. All while telling us inflation was temporary and our money was safe. If everything was really fine, why would they be frantically buying gold? China added 225 tons to its reserves. Poland added 130 tons. Countries like Turkey, India, and Singapore are all stocking up as if they know something we don't, that paper promises might not be worth much in the storm that's coming. Then, in July 2023, another clue dropped. The Bank for International Settlements, often called the Central Bank for Central Banks, unveiled something called Project Finite. They called it a vision for the future of finance. But hidden deep within the technical jargon was a chilling phrase. The new system must be capable of operating during periods of financial instability or infrastructure disruption. Think about that. They are building a parallel financial system designed to work when the current one breaks. Why would they need that unless they expect the current one to fail? It doesn't stop there. The Federal Reserve, the Treasury, and the FDIC aren't just running theoretical stress tests anymore. They're running full-scale simulations, practicing for a scenario where multiple major banks collapse at the same time. Not if, but when. This isn't preparation for a possibility. It's a dress rehearsal for what they see as an inevitability. If this sounds familiar, it's because we've seen this movie before. History is filled with examples of central banks acting in secret right before a crisis. In 1927, top central bankers met in secret to coordinate interest rate cuts, helping inflate the very bubble that led to the 1929 crash and the Great Depression. In the late 1960s, they created the gold pool to pretend the dollar was still backed by gold, all while their reserves were bleeding dry. They assured the public everything was stable right up until the system collapsed. Then in 2007, just before the global financial crisis, they quietly set up temporary swap lines while publicly claiming the subprime mortgage problem was contained. It's the same playbook every single time. Build emergency tools in secret, tell the public not to worry, and then act surprised when it all falls apart. So, what are they preparing for today? It seems they're juggling multiple crises at once. The U.S. Treasury market, the supposed bedrock of the global financial system, has already broken twice in recent years, forcing massive emergency interventions. To prevent the next collapse, they've built a permanent, unlimited backstop. You don't build an infinite safety net unless you expect a catastrophic fall. At the same time, a slow-motion disaster is unfolding in commercial real estate. Over $1 trillion in loans are coming due, but property values are plummeting and office buildings are empty. This puts hundreds of regional banks on the brink of insolvency. The only reason we haven't seen mass failures yet is because regulators are letting banks pretend their assets are worth more than they really are. It's an accounting trick, and it can't last forever. And then there's the technology they're building. Central bank digital currencies, or CBDCs. 107 countries, representing 95% of the world's economy, are working on them. These aren't just digital versions of cash. They come with programmable features, the ability to put expiration dates on your money, restrict what you can buy, or even impose negative interest rates directly on your savings. These are tools of control, perfect for steering public behavior during a crisis. All of this is happening against a backdrop of global debt that has spiraled to levels that are mathematically impossible to repay. This leaves central banks with a terrible choice: let governments default, triggering chaos, or print unimaginable amounts of money to cover the debt, destroying the value of our currency. History teaches us they always choose to print. Finally, the era of the US dollar's dominance is coming to an end. For decades, America could export its inflation because the whole world needed dollars. But now, countries like China and the BRICS nations are actively building their own systems to trade without using the dollar. The Bank for International Settlements itself has admitted a future with multiple reserve currencies is likely. When the dollar loses its special status, all that inflation we sent overseas comes rushing back home. Our $34 trillion debt problem suddenly becomes a purely domestic crisis. So, why aren't they warning us? Why do they keep insisting everything is under control? Because the modern financial system is built on one thing: confidence. The moment they admit how fragile things really are, they risk triggering the very panic they are trying to prevent. The system would unravel. So, they build lifeboats in the dark while telling everyone on deck that the ship is unsinkable. But when the narrative finally changes from reassurance to crisis, it will be too late for anyone who simply trusted the official story. Throughout history, every time a financial system has been reset, it's the average person, the saver, the pensioner, the wage earner who gets wiped out. The winners are always those who hold real, tangible assets, things like land, productive businesses, essential commodities, and monetary metals like gold and silver. The lesson from all this is clear: the people in charge are preparing for a storm they cannot admit is coming without starting it themselves. The time to prepare is not when the sirens are blaring and they finally admit there's a problem. The time to prepare is now, while they are still telling you everything is fine. What you choose to do with this information is up to you. Thank you for watching. If you found this valuable, please like, subscribe, and share it with someone you care about.